Welcome, G3 investors and patrons. This is Greg Gallagher, and we're going to look at the market. Week 11 ended on March 18th. Well, the key to this week was the Fed. You can see here that we are looking at a 3-month chart of the NASDAQ Composite Index, and it went from, we had a correction, we're still in correction, that started from January high at $15,832 down here on March the 15th, which was the low, and it closed at $12,581. That's a over 20% in correction. And this was Monday. This was Tuesday, the day before the Fed announced their interest rate hike, and the market even bottomed out right there. Of course, we need confirmation as G3 investors that we've got a turn, and we got that on the third move up. We cleared this consolidation. But the Fed was hiked rates on Wednesday, a quarter of a point. That's the first time since, I believe, November or sometime in 2018, not November, I'm not exactly sure, but they signaled an aggressive battle against inflation, which is around 8%, by stating that they're going to do 6 more rate hikes. And in addition, the Fed will likely start reducing the amount of bonds they buy back and other paper. So it's a very aggressive move by Chairman Powell. But guess what? The market loved it. It absolutely loved what he said and how he said it, because he convinced everybody that there's not going to be a wage price spiral, and in spite of the labor market being very strong, and even though inflation is spreading throughout the economy, he doesn't believe that there's going to be any need for a recession or anything like that to get inflation back down to their 2% benchmark. Now, he wasn't saying that was going to happen this year, but he did indicate that he thought inflation would start to tame in the second half of the year, and then by 2023 or 2024, we would have it back down to their benchmark, all without any possibility of recession risks. Recession risks, and according to Chairman Powell, were not elevated. So there you have it. The Fed are miracle workers. Well, this recovery that the NASDAQ experienced over this 4-day period is 40%. Last week, the NASDAQ was down 6.6% for the month, and it gained 8.2%. It's now, it's at 11.2% year to date, and it is positive 2% or 1% month to date. So that was a big move, and there's no doubt about it. That's a good recovery, 40%. But there's 3 things that still affect the market. And before we look at the ETFs that we have 15 open positions, and here's one of them. This is the QQQ, which looks very similar to the NASDAQ Composite, since it's the 100 largest and best companies that are in the NASDAQ. And you can see that it has reacquired this red line here, which is a 50-day, but it's still under its 200-day. The way I trade, or way I look at the market, until it gets above that 200-day, we're still in a correction. And this is just, it's an up cycle in a correcting market. It has to get above that 200-day moving average, or reacquire that and stay above it, for me to say that the market is back in an uptrend. That's just the way I call it. And anyway, the QQQ is a very strong ETF, and we have some others to look at. We have 15 open positions. We're 89% invested. So as trend traders, we have caught this trend, this change in trend. How long is it going to go? I have no idea. I'd like to see it go back up and test these highs. Will it do that? Again, I have no way of knowing what it's going to do. All I can do is follow it and make as much money as we can. Here's some of the other positions we have in ETFs that have a strong recovery. The SMH, which is the semiconductor index. You can see it's got a strong recovery, and we took a position here at 262.50. XLK, which is the technology sector. That includes others other than, the Apples and the Googles and everybody else that's not semiconductors. And again, that's a strong recovery. And it's real close to it reacquiring its 200-day moving average here. So that one looks good. So technology is going to be a big part of this recovery. Consumer discretionary is XLY. Again, this is a pretty strong recovery. Looking really nice. Reacquired the 50-day and looks like it's on its way to the 200-day. XLV, which is the healthcare sector. Let's take a look at that one. That's looking pretty good. Yeah, that's looking really good because we just had the death cross here sometime this week on Wednesday, and it looks like it's going to go right back above it because here we're off to the races on that one, and we're up pretty good on that one. XLB is the material sector. You don't go anywhere without some materials, and again, that's a real strong one. It's crossed over its 200-day, and it has a convergence here with the 50-day and the 200-day converging right there and actually going negative for one day, I guess. Okay, industrials. I like to look at those industrials. Yep, there they are. They've reacquired their 200-day. So those are all good sectors. Now, I like to look at the Russell, but we don't trade the Russell. We trade the Russell 1000 because it moves faster than the Russell. So we can see that the Russell 1000 has reacquired its 50-day, and it looks like it's heading up here for its 200-day moving average. I don't have a position in transports. I got stopped out. I got a little nervous on that one and on this pullback, but it's a strong move. Looks like we'll be getting back in that one at about 269, likely on Monday. Well, that's it for the ones that I want to look at. So let's look at how we have done. How's G3 Investors done? Well, we have made 38.5% month to date through March 18th. We were up 4% for the week. We're up 10.4% for the month, and we were absolutely crushing our benchmarks, which is the S&P 500 and the NASDAQ. It doesn't matter. Pick your poison. We're crushing it. If you're interested in becoming a patron of G3 Investors and you get this stuff in advance, just highlight that in your browser and sign up. Before I go, I do want to take a look at, I think I got, where is it at here? There we go. Take a look at the heat map. This is a 1 week performance of the S&P 500, and all I can say is there's a lot of green on the screen. And it's good to see those oil prices coming, at least the energy's coming down a little bit. Hopefully this Ukraine-Russia war will get settled here, and we'll be off to the races again. Well, that's it for this week. This is Greg Gallagher with G3 Investors, wishing you good trading and good luck.